It's very clear that on a global scale, the economy is heading down, but you cannot sit idly by. You need to take action today. In fact, I'm going to give you some information that you need to know. The first thing is jobs or not. What are we talking about here with the job situation? It looks precarious to say the least. The second thing is Europe is failing. That is definitely the weakest link globally, and I'll show you some information around that. And the third is more layoffs seem to be coming here. If you look at the tech sector, that's one heavy aspect. I'll give you some others. Let's begin. What if I told you that the information that you received from the mainstream media and from the government was inaccurate? No, impossible, you'd say. No, but seriously, look at this. There is a 2.3 million jobs differential, and it just depends on the information that you use to collect it. You see, what they give you is the establishment survey. And that's one way to look at the jobs numbers, and you could also look at the household survey. It just depends on what information they collect. Now, you might think to yourself, what do you mean? How could there be different information? Well, how many people are actually employed, and how many jobs are being taken, and how many people are quitting, and all these things? This is done based on surveys. They're not going to actually tabulate each and every job. This would be very difficult and expensive, and it happens so often. They use surveys and they are able to extrapolate that information to get you the data. Well, it depends on where you look, because some of them happen to show over 2 million additional jobs. Wouldn't that have a big impact on the way we look at the economy? Ah, that's right. And so you have the non-farm payrolls, which you might hear of. And then we have the actual employed workers. Okay, big difference here. So there's just a different way to look at information, one data point. It's not going to tell you the whole story, but that is one aspect. Where the economy is showing signs of a slowdown near recession levels. Both sales and profit margins are declining, and that's according to the National Association for Business Economics. It's the revenue decline that should get more attention, as it could be signaling that the Fed interest rate policy is quickly slowing the economy. But the strong job market again defied expectations in October's job growth, making it hard for the Fed to ease off the restrictive policy. Now, isn't it so interesting? I first showed you what's happening with the job situation in one aspect anyway. And then you see this. Well, if we look at the U3 unemployment rate, well, then it's a different story. You have to understand each level of every aspect they show you. And if you get on this channel here and you subscribe, you realize, oh, but that and this, and you connect the dots together. My goal is to empower you to be knowledgeable, to be able to figure this all out. And if you want to call me out on something, put it in the comments below. Let's all discuss that. I can't get into each and every aspect in every video, or else every video will just get longer and longer, but I try to do my best to bring you the updates as they come along. Here we have it. I mean, I think it's pretty important to look at what's happening in Europe first. That's key. Looking at this, ECB President Christine Lagarde warned that a mild, quote, mild recession is possible, but that it wouldn't be sufficient in itself to stem soaring prices. While a contraction isn't her baseline scenario, her Latvian colleague said that he expects one in the coming months. So it really depends on where you look, but the risk is always the same. And guess what? Rising interest rates. I think it is pretty important, especially in areas like Europe, where they haven't been able to raise interest rates for a long time. It seemed like they were never going to get to this area. And even though we're still very, very much near the bottom, I think it's important to see what Europe does. Let's keep an eye on them. Europe may see this is crazy. Let me read this again. Europe may see forced de-industrialization as a result of energy crisis. I mean, I cannot believe I just read that. European industries, including ferroalloys, fertilizer plants, and specialty chemicals, are shutting down as a result of the ongoing energy crisis. Certain industries may not come back even if the energy crisis eases. An increasingly tight regulatory environment is another reason for de-industrialization in Europe. I'm telling you right now, my friends in Europe, I'm just trying to be honest with you. I'm trying to tell you the truth. This is going to be hard times for a lot of people. Europe is in the worst position globally right now. They have very bad growth prospects in general. And yet, when you look at the debt that they have, you look at there's just, I don't know how to say it. I don't want to be, just position yourself accordingly. That's all I'm trying to tell you. Look at the data and be honest with yourself. Now, your particular area, exactly where you are, and maybe the job that you have, and all these different things would determine, your trajectory. But in general, this is not looking good for Europe in so many different aspects. Here we have a BASF to downsize permanently in Europe. World's biggest chemicals company says that high energy costs make region increasingly uncompetitive. Just think about that for a second and the impact that this has on average, everyday people. Because if these companies move out, if these companies don't do business, and suddenly they're shutting their doors, shutting their plants, this de-industrialization process takes place. Well, if somebody still needs a product or service, now they have to pay much more. And that, of course, is never a good thing for the common man, because he's going to get punished and beaten down until there's nothing left. And what happens at that point? Well, of course, individuals can go and they can ask their government for help. And they can go on the universal basic income that's provided to them because they're desperate. Or they can go onto the streets and maybe make a little mess. That's what happens in many cases. People get frustrated, people get pushed to the edge, and then eventually on over it. This is something that we should be keeping a close eye on. Eurozone October PMI, we're talking about manufacturing, adds to evidence that the bloc is heading for recession. You do not need to look at the PMIs to tell you that, but that is one indicator of that, and I think it's important. And then I wanted to show you this. While it's not about Europe, it is about what's happening right now with the old order. Saudi Arabia reiterates commitment to China regardless of US concerns. I've showed you this before. I saw the comments. I saw many people suggesting, oh, you don't know what you're talking about. The US and Saudi, they're best friends. They're tied at the hip. They're Siamese twins. And while obviously the two of them work well together in one aspect, what happened here? What's going on? You had a clear rejection of the US in recent times, saying essentially, we don't want to really be dealing with you too much anymore, and we want to make that known, and we want to partner up with China. This is starting to spark the potential for Saudi Arabia to join into the BRICS nations. That would also potentially add, because the BRICS want to create their own currency based on the reserves of their own currencies. And that would be something, because maybe they don't want to trade with each other with oil and every other commodity in US dollars. Maybe they want to use their own. And they have been doing that somewhat, but perhaps to a much larger degree. We will see. UK house price dip to push young homeowners into negative equity. So this is what happens when you buy at the top, you get punished. Look at a lot of the people that bought into stocks and real estate and cryptocurrencies and everything, and they got in that hype, and now they're being told by every influencer, you don't need to worry, you just need to hold on. And some stuff, you can hold on all you want, but it doesn't come back up. Some of them, really strong companies will do better. And of course, if you look at it on an index, you might be all right. But sometimes you get punished. If you look at or even read the book, The Psychology of Money, it tells you that something's very important. It's like the index itself might move up, but if you see which of the stocks perform well, we have to understand this over decades, that you always have a few outliers that have the outperformance, and a lot of stocks do very badly. I think that's not understood by a lot of people. Look at what's happening with Meta or Facebook and other companies right now, where they're just getting slaughtered. We'll talk more about that in a second here. Growth that cannot withstand many further rate hikes, as is implied by the Bank of England, in circumstances of more sustained hikes elsewhere, is an increasing risk. All I wanted to note here was that when you have these rate hikes, you are encountering a problem because there's way too much debt, because there's way too many headwinds coming at this, and the economy is not going to be able to actually take it head on. It's not going to happen. So get it out of your system. If there's higher interest rates, you have slower growth. And if it gets to be prolonged for much longer because if inflation stays around, it's very sticky, well then it gets worse and worse and worse. The longer interest rates are elevated, the worse things get. Okay? Yeah, obviously you want to follow me on Twitter at the Money GPS, but I want to make another mention here to subscribe here on the channel, on the YouTube channel, because every day I'm bringing out news that is absolutely key to understand, connecting all the dots. Okay? Look at Facebook's parent Meta preparing to notify employees of large-scale layoffs this week. The same information here covered by CNBC. Same thing, essentially saying they're going to lay people off right now. And this company, I mean, it's unbelievable. It was $1 trillion company for a brief period. $1 trillion company. Next thing you know, it's worth like something like $240 billion. Still a huge company, don't get me wrong, but to see where it was and where it is now, this is a huge change. And people would have said, no, impossible. This stock, maybe it can fall 40%, but is it going to fall 70% plus? No way, impossible, never going to happen. But this is where we're at today. We really must understand that when you look at an economy, there's so many moving parts. You can't have one statistic or two that really defines what's happening. I showed you some in this video here. Let's talk more about that. Just look at practically any statistic today and they're in unusual territory and expected to be there for a while. You look at inflation numbers, you look at the real jobs numbers, you have to understand what's happening with manufacturing and shipping. Everything is out of whack. Everything is different than it was before, okay? Especially over the last couple of years, everything is really a mess. And understand that this leads to things that are obviously going to be detrimental. Investors have accumulated more cash and have fled many big stocks and other risk assets. They see that happening and they are doing something with their cash. Now, to a certain degree, they still own a lot of stocks. We haven't seen major capitulation and all this, but I think it's important to note. You got the catastrophic events that are happening or concerning, and so investors, they take action accordingly. Watch closely the direct impact of Europe's failure onto the United States, as one cannot persist without the other. If Europe falls, that's one domino to fall, then of course the US will take a hit as a result. Depending on what happens, depending on how it all unfolds, if the financial system in Europe fails, it's going to have a huge impact on the United States. Just like it was the other way around too. During the subprime crisis, a small thing, subprime was small, but it had huge effect across the entire world. Do not overspend as an individual today. Please do not do so. Make sure that you have enough for a rainy day. And I know, easier said than done, but do what you've got to do. Always think about what services that you can offer to other people to bring in additional income. Change oil on somebody's car, like a skill you can learn in one day. And the second thing is car detailing. This is, I don't think people realize this. And by the way, door caulking. Caulking on a door. You would think, is that a business? What are you talking about? I just heard of somebody in a well-to-do area that was making, I think it was over $100 to caulk one door frame, the outside of a door, so that what would happen was the worker would put in a brand new door and then they wouldn't do the caulking. The door guy doesn't do the caulking. So he has a guy, you can call my guy, no problem. Sends him over $100 to do that, to do 10 minutes of work. These things right here are not so easy because you got to get the contacts and stuff, but If you can have more income. If you do one of those per week, car detailing, what is it? $100, $150 easily. People in the well-to-do areas, they still have disposable income, and you need to, in fact, do what you can to try and monetize that. I think it's important because, hey, they're willing to spend. They're giving their money to somebody. You have to be the one to take it. Give them a good service. Give them a smile. Make them feel good. All these different things. If you appreciated this information, hit that subscribe button down below. Each and every day, I bring you the latest and greatest. Take care.